Well, good Monday morning and welcome to Connect, the California MBA's weekly podcast featuring one-on-one interviews with movers and shakers in the mortgage industry. It's March, so our new monthly theme for this month is going to be all about customer experience. I'm really excited to welcome in our guest today. He's got a great perspective on the topic, one of the top influencers on social media on the topic, and certainly one of the best minds going right now in the mortgage industry on customer experience and engagement. And typically right now in the podcast, I talk to you about why you should be touching base with this guy and finding out more about his product at Insellerate. But hold that thought for a moment and you can hear right from the man himself. Before we do that though, I want to toss it over to Susan Milazzo at the California MBA for this week's weekly update. Susan.
Thanks, Dustin. Hi, this is Susan with the California MBA here with your weekly update. This week, I'd like to talk with you about a new series that we're featuring on our social media channels called Talking Crep. This is going to be an interview segment that features industry leaders in the commercial real estate finance industry, talking about some of the hot topics that are going on right now. Our first series is going to be launched tomorrow and will feature Cody Sharforis with Slack Capital, who's also a member of our board of directors, and David Rosenthal with Curtis Rosenthal, talking about valuations during the COVID era. So if you don't want to miss Talking Crep tomorrow as it launches or any of our future segments, be sure to subscribe to our YouTube channel and follow us on LinkedIn. That's it for this week. Back to you, Dustin.
All right, thanks, Susan. All right, now let's welcome in our guest today, Josh Friend, CEO, founder of Insellerate. Welcome, Josh.
Hey, Dustin. Thanks for having me. Really excited to be a part of this.
Yeah. Well, tell us what's going on. What's the latest with Insellerate these days?
Yeah, so just, this is a great topic we're going to be talking about. Really, Insellerate, we've grown rapidly over the last year. We grew over 250% our customer base. So we are definitely helping a lot of lenders now. And really what we're doing is we're doing it through our customer experience platform, which has a CRM, has lead management, sales enablement, robust content library. We have a mobile and a desktop application. So last year we released our mobile application, which has really, our customers have really loved, given access to loan officers in the street to things like rate lock extensions without having to go into Encompass or the LLS to do that. So we've had a lot of great innovations, and we'll be talking about some of this stuff and how it relates to our technology, but just the greater overall technology as we go on.
Yeah, well, great. All right, well, let's dive into the conversation here then. So, I mean, from my perspective here, much of the focus in the past half decade or more in the realm of customer and user experience has been on the front end, the user side, the borrower. But since the advent of Rocket Mortgage and some of these other digital mortgage platforms that sort of put the driver or the borrower in the driver's seat, it seems like the industry has started to finally realize that we can improve customer experience by also innovating in process and technology that the customer doesn't always realize. So what are your thoughts on this shift?
I think you're absolutely right. I've been in the industry for 22 years, and if you go back, Dustin, probably even to a year ago or 2 years ago, and we've had these conversations, I said I think the thing that the industry needs to and it will get to is going to be back-end automation, right? And that helps customer experience. Overall, customer experience is what's the experience someone gets when they buy something from you? What's the transaction look like? And the customer experience that a lot of people have, and everyone's watching this has done a mortgage. I mean, when I owned my own mortgage company, I was going to refinance through my own mortgage company. I'll be honest with you, I didn't like the customer experience for my own company because I had to sign disclosures 2 or 3 times, and I had to provide documents more than once, and all this kind of thing. So we really see that customer experience in the back end automating things. There's really, in today's marketplace, the technology is there. You don't have to have 6 people look at the same set of documents, right? You don't have to have the checker check the checker who checks the checker who checks the checker, if that makes sense. There's AI automation in the background now with OCR technology that really works. There's the ability to actually close a loan faster, and we're seeing that now. Just it's on the forefront on the customer experience side. We think about it is if you go online and you apply for a mortgage, and depending on what the lender you go to, if you're able to download your W-2, pay stubs, all your documents in real time from, let's say, the source data. So it goes to your bank account and actually gets the data and puts all the information in front of the lender. You can automate things like the work number. So if someone says that, you can verify their income all up front. That's where we really see this as going in places. Really, how do you make this back end process better? Over the last year, when the market really took off, most lenders didn't have time to say, oh, let's figure out how we can make this more efficient. It was just, let's just throw a bunch of bodies at the problem. Let's just hire as many people as we can, put the people in there, and we'll figure it out. Well, we're seeing that's changing because now you can be much more efficient, right? There's no reason why a processor in today's market closes the same amount of loans that they closed, 10 years ago, right? Technology is better, it's faster. And that's really what we need to see. So I say the back end operations, right? Underwriting, drawing docs, processing, all those are the things that really we see that are going to change and obviously bring to the forefront and give customers a better experience.
Yeah, well, and I think to your point, I mean, it's not just a matter of having a flashy, front end that the borrower sees. If they get their loan closed in a few days sooner, or have to do one less round of documents, I think that improves the experience. Whether or not they even realize that that's what's making them happier.
You're absolutely right, and we to kind of further that point, we did a study, and people can go to our website and pull this down. It was a days to close pull through study, and we have, we handle about 300,000 borrower applications a month now, over 20,000 loans monthly funded across our platform. So we have a lot of data to look at this. And what we looked at and saw was, and this was very interesting, that for every day someone reduced the time to close, their conversion rate went up by 1%, pull through rather. So loans go into process and you put 100 loans in a process, and let's say right now you're funding 75 of them. I'm not sure what the number is. Let's just say 75 is your pull through. And your average days to close was 40. Well, when those lenders got to 39, that 75 went to 76. Transversely, if they went to 41, that 75 went to 74. So, and that is customer experience. To your point, they may not know what it is, but they are happy because they now have a great experience, and it's easy to actually buy that loan from you.
Yeah, well, and certainly you're getting closer to that customer for life relationship, and bottom line for the lender itself. So let's next question here. Where do you think we're going to see the next big breakthrough in customer experience?
Just what kind of echoing what we just talked about. There's two things. One's going to be, and we're seeing lenders do this now, and they're using platforms like ours to do this, is to better engage with their customers at the right time, understand what's going on with those customers, so you can provide value to them, so you can build customers for life. And then secondary to that, it's going to be, I think it's going to be Fannie, Freddie, and more day one certainty being brought to the forefront. Lenders are actually really being able to use day one certainty, and that's a industry norm versus just an exception right now. Not everyone, right, is willing to take a day one certainty, even knows how to understand how to transact that, or to underwrite to that, or fund to that, because of all the rules and what servicers do and so forth. So I think having some uniformity of how we can actually produce a mortgage to a customer faster and better, and that's going to be, I really see in the back end, right? This front end, all the innovation that's out there as far as borrower engagement, customer for life building, that's not changing. I mean, that's the same technology as certain lenders have been running for 10, 15 years. So really, we see the advancement is the back office. We have not seen a lot of money spent on making the back office work. We saw the same LOS systems out there that dominate the market, that have been in the industry for 20, 30 years, and they still manage the same process. Nothing's changed. It's done the same way as it was 30 years ago. That's going to change. That's where we really see there's going to be some big change in the marketplace over, I'd say, in the next 3 years. It'll drastically change, and we'll see times to close cut in half or more, right? That's kind of where we see the market going.
I mean, that is a huge breakthrough, times cut in half, absolutely. So what changes do you see as, I mean, we're obviously still right in the throes of the refi boom right now, but at some point, whether it's this year or later in the year, or into next year, the pendulum's going to start swinging back toward purchase, obviously. What changes do you think we're going to see when it comes to customer engagement and experience?
Yeah, so that's a really good question. It's interesting. Right now it's very timely. As we all know, this month has been horrible for rates. Rates have gone up, basically rate sheets about 0.5%, unless yesterday we lost 100 basis points in pricing. So we definitely see, the market's going to be moving, and the changes as people go to more and more purchase. Where we see something, because that we see a opportunity, and we have several lenders, very, very, very successful, actually many lenders, very successful, buying purchase leads now, either working them through a call center or push them down to the local real estate agents, or loan officers. So an example is, and let's just think about this, right? So over the last 12 months, everything's gone virtual. People are really used to being in a virtual world. when I'm online looking for a house, right? And I do it all the time. So I just like to see what's for sale. And it's nice to look at. I go to Zillow, which, a lot of people are saying, well, Zillow is going to take your mortgage from you, which that's true. So I go to Zillow, look at a house, but guess what? I always see ads for mortgages. I go to Redfin or all these other websites and I see ads for get a mortgage with me, get a mortgage with me, get a mortgage with me. There's a lot of people that say I want a mortgage online. And what tends to happen is lenders don't buy those leads. They don't respond to those leads. They don't work those leads. So those lenders who do are having huge success right now, right? So I'm buying local leads. I'm pushing them to my local loan officer, who they're getting a couple, maybe 1 or 2 new contacts a day. That's in their marketplace. They're using technology around it to keep that person engaged because they don't have the relationship. It's not a referral. It's someone that went online. So they're using technology like ours to engage them in Facebook and emails and text messages and phone calls and ringless voicemails. And that's how they're driving business. So I really see, consumer direct purchase growing. I think if the refinance boom didn't happen over the last year, we would have already seen a large amount of more consumer direct purchase going on. I can just tell you from lenders that we work with, some of our larger lenders and successful ones, they're spending a lot of time and money in figuring this out and making this work well for them. And they're seeing, great success. Some of them are at, we have lenders that have been, 80+% purchase through this whole entire refinance market, all based off of internet leads. And they're doing, they're very successful with it. So I think we'll see a lot more of that. And then we'll see those loan officers interacting with the realtors saying, hey, let's change this paradigm. You're no longer giving me referrals, or maybe you are, you will, but I'm going to give you a buyer. I talked to this person, I got this person, they're approved, they want to go buy a house. Hey, Sally, go find this person a house. And by the way, Sally, the next 2 or 3 pre-approvals would really love it if you could send some business my way as well. I think that's where we're going to see a lot of the shift.
Wow, that would definitely be a change in the LO realtor relationship, and I think probably for the better.
Yeah.
So let's switch gears back to process here. What are your thoughts on the most effective strategy for lenders to stay in touch with borrowers throughout the process, and how can originators maintain that touch with borrowers during these high volume periods that we're in right now?
Yeah, so I'm going to use 2 terms here: data alignment and automation. And data alignment, what I mean by that is unfortunately, most lenders have customer data interactions, activities being managed and housed in multiple systems that are not connected, right? So I have a phone system where I call a customer, they call me. That interaction with the customer is only in that phone system. I have a CRM or online portal where someone interacts with me, and that's only recorded in that spot. What we're talking about is aligning the data. So meaning when you have high volume, you don't have time to do a lot of manual processes, and you need to be as efficient as absolutely possible. So having clear, clean, aligned data from your, for example, your lender on our platform, if a customer calls a loan officer, the system knows that. You call, the loan officer calls a customer, you know that. If they text both and back to the customer and back, the system knows that. So that way, you're not sending out an email saying, hey, Dustin, haven't spoken to you in a while. What's going on with that refinance? And in reality, you and I just spoke today or yesterday. Like that doesn't. Yeah. So now having that aligned so that you really know what's going on with the customer, then it's going to be laying out some engagement pathways. Okay. So let's walk through the buyer, the journey. Customer A, customer B, customer C. Here's one of the cohorts. What should it look like? Someone who's a first-time home buyer, hasn't been pre-approved for a loan. What should the messaging be to go out to that customer? And it can't just be emails, right? I remember, 10, 15 years ago, automated email marketing for lenders was great. It was new, it was fantastic, and you still need to use it, but we're so far beyond that now, right? So it's how do you, align the data? How do you automate your actions, and then define a best practice workflow, if you will, for borrower engagement, meaning what message do you send them after it's been 6 months and they have been pre-approved for a loan, but they haven't bought? What's that message look like? Versus maybe it's someone whose credit didn't quite qualify. How can you message to them to let them know as soon as they're ready, you're ready to help them with their next mortgage? So it's really understanding that. And, I think the value, and lenders have been very transactionally based. Lenders are not relational based. We're transaction based. I see lenders who don't even really market to their past customers because they're just marketing to new customers, and they're just like, well, I got so much business, I don't need to worry about my past customers. Well, you have to. The average customer is 7 to 11 transactions in their lifetime. Now is the time when you have high volume to give the best experience possible. That way, over the next 5-10 years, you get all their loans and you get more business.
Yeah, absolutely. Absolutely. Well, and I mean, think to your point about having the data aligned there, that's when you're able to hit them with the right time, with the right message at the right time too.
Yeah, that's really important. We've all gotten messages from someone in marketing our company, and it doesn't make any sense of what's going on. And all that does is that you lose trust and credibility with that customer when you're not communicating to them appropriately.
Yeah, that's when I hit the unsubscribe button.
That's right.
So speaking of borrowers here, and you mentioned this earlier with your forays into Zillow and Redfin. So does the borrower, the fact that the borrower has an increasing, ability to educate themselves, greater access to information with the internet and the sites like Zillow and Redfin, et cetera, does that change how originators communicate and what they communicate? And I would say, I guess, when they communicate with borrowers.
Yes, of course. Yeah, absolutely. Because the borrowers are so much more self-educated in themselves, and they're online. If you think about this, go on the purchase side, just really think about the transaction in 1980 or 1990 or even 2000. You wanted to buy a house, you had to go talk to a real estate agent and say, show me all the homes that are for sale in the neighborhood. They would maybe give you a paper with the 10 homes that are for sale. There wasn't an online place to go look for these homes. This was the realtor controlled that transaction because I had to in order to find out what was available, I had to go talk to a real estate agent. That's gone, right? So what we're seeing is borrowers are now educating themselves on homes they want to buy themselves. They're doing research about, property value, demographics, what's the school look like, what's the income level look like, crime rate, all that stuff on their own now to figure out, is this a neighborhood I want to live in? So that's definitely, that's changed drastically. And so it's really, from that, how does that, impact the overall process? Is, if I'm a borrower, I'm now empowered to find a house I want to buy. And then the other side of it is, if you are connected with the right lender who empowers you to basically immediately know what you qualify for, right? That's a solid point of sale solution that when you apply online, runs pricing, runs credit, runs DU, does work number verification, comes back and gives you, a real approval. Here's a loan you can get. I think that's really change happens because now we're empowering the customers. Now, the truth is that that's very seldom done right now because very few lenders have the ability to do that. But that does exist and that will change. We just look at how people are buying things online now. I mean, there's people that a year ago, I'll be an example. I never ordered groceries online. It wasn't even something I'll go to the grocery store. I mean, truthfully, it's like Blockbuster Video. I liked Blockbuster. I liked Friday night going to Blockbuster, walking around, looking at all the movie titles and picking out a movie. I'd still shop at Blockbuster. Obviously, that doesn't exist anymore. The market's changed that. But for me, I didn't want to buy, Amazon or order groceries on my phone. But over the COVID, I completely have. My use of buying stuff, getting access to ordering things online through my phone, and primarily, you know why? It's so much easier. Right? It's just easier, access to more. So customers don't go, oh, in all my other places, I want all this information and easy access and be able to buy in real time on my schedule. But when it comes to the mortgage, I want to wait till Jim calls me back Monday at 10 o'clock to talk to me about my loan. That doesn't work. It's Sunday, I found that house. I want to know now, can I get a loan? What does that look like? So that's where the change happens. So more self-service. And that really comes down into the play of having the systems in place to manage that transaction now, right? So we, the term consumer direct retail with the terms we use, but you're a loan officer selling a loan to a customer, however the customer came in, maybe a different channel, but once that happens, the transaction is the same, right? You're selling someone a loan, you have to process it, you have to explain to them the features of the loan, whatever else that they answer questions. So those two things of consumer direct and retail. I mean, think about Amazon. Are they an online store? What are they now? Or are they just a company who sells you what you want to buy in any method you want to buy it, right? Because they have physical stores now. You can go into Amazon stores.
Yeah.
They own Whole Foods. So they're definitely a brick and mortar company, right? They're not just an online retailer. So what are they? They are a company that sells you what you want to buy, how through any mean. And as lenders need to be a lender who gives mortgages to customers how they want to buy them, and in whatever channel. And so it needs to be the same transaction.
That's a good point. Well, and I think especially when you're talking speed, I mean, we're both in California here, so I think we can both attest to this. I mean, we've all had friends try to buy houses, and maybe you've bought one recently, but I just know with the lack of inventory on the market, having the speed, giving the borrower the speed and the ability to know how much home they can afford right now is crucial right now. I mean, sometimes, there's homes going, at least in my area, there's homes going, with, people buying them sight unseen and, getting, 20, 30 offers within the first couple of days.
Yeah, you're absolutely right. So being in a place, I talk to lenders and friends who have made 6, 7 offers on different homes recently, and they're not getting any of them done, accepted, and they're frustrated. And it's, so how do you empower that borrower to be better equipped to get a loan? Well, or to get the house. When you make the offer, a couple of things that, they want to look at is, are you approved? Who's a lender? And what's this approval actually look like? So if you're actually able to give your borrowers approvals that say things like, income's been verified, right? Assets have been verified, credit's been verified, all these things have been verified and they're approved, that one goes higher in the list of people to sell to, because the person offering the most may say they're only putting 3% down and they don't have an approval yet. And so you as the buyer or seller may be concerned that, well, that might not work, or they may not have the money, or that transaction may fall through. So having that speed up. And then you're right about buying home sight unseen. My brother-in-law is a real estate agent here in Newport Beach and Laguna area. He sold a house, I think in the last about a month ago, for $25 million sight unseen. Walked through the house with a iPhone FaceTime on, walk through, show the person, the buyer and their real estate agent the house. The real estate agent wanted driving down just to visit, but they offered, and I think they closed in 2 or 3 days, all cash. Boom, just sight unseen, which is in my mind like, wow, if someone's going to do a transaction like that, people are doing transactions, at $500,000 all the time, sight unseen now.
Yeah, well, and the only way, if we're lenders out here, the only way that we can, you can compete with the all cash offers is to have, someone that's pre-approved, someone that's ready, and their data is verified, and they know it, and they know how much they can afford too. So I think you're totally right on that. So let's take another swing at this topic about data. How are, in your mind, the top lenders today, how are they turning that vast amount of data into actionable intelligence to drive sales on their end further?
Yeah, kind of back to data alignment, right? Some of our more successful lenders have a real strategy. From anyone who comes in contact with them as a company is going to have a workflow that's going to be automated, and it's going to automate the communications at the right time, the right message to ask them to do the right thing, right? So if it's someone who's not approved for a loan because their credit's poor, you're not saying call us and see if we can give you a loan. You're saying here's steps to improve your credit. 3, 4 months later, here's some more steps to improve your credit. Hey, if you've improved it, give us a call. Or people are using, other services, other data monitoring services like Sales Boomerang. They're monitoring those people who have not qualified for a mortgage. And once they qualify for a mortgage, it's automating our platform. We're creating a marketing campaign, reaching out to the customer, the whole 9 yards, and bringing that person back into place. So really, you have to look at your tech stack, right? There's a lot of old technology in the industry right now, lots of old technology, and it was great because it's what's worked. It was the first stuff out there, fantastic, right? Model T Ford was a great truck because it was the first truck out there, but I don't think anyone asking, can I buy a Model T Ford to go drive around town anymore? Unless it's Sunday driving, because cars just drive a lot better now. Things have changed, so things have to adapt. So having the systems in place that have, I'm gonna use a couple terms here, and we use terms all the time in the industry, and they mean so many things. CRM, what's a CRM? But it's a loose definition at this point. What's marketing automation? Loose definition. What's the difference between those companies, right? You take a look at like a HubSpot, who doesn't really serve our industry but serves other industries. What are they? They have a CRM. They have marketing automation. They're, what does this all mean? So what we see is lenders have a CRM. In that, components of it are lead management, which is a huge thing, telephony management. So lead management is when a customer raises their hand to buy from you, how does that person get communicated? What system manages that? Is it automated? It needs to be automated. Meaning if a person doesn't take the action, the system needs to take an action for the loan officer, or give it to another loan officer to take action. That way, every lead, everyone's getting contacted. And I can tell you, this is not being done well in our industry. We have done 3 separate, what we call the MBA contact studies, where each time we go out to between 500 to 1,000 lenders, we apply online, ask them for a mortgage, then we time how they respond to us. What I can tell you in the 3 studies we've done, the best was 56% of the people did not ever respond. So we're talking between 56 and 60% of the time, online inquiries don't even get responded to by the lender. So, I mean, you have to, how can you do that? That's crazy, right? And you know, what we can see right now is rates went up. And, you know, they've been going up for a little while. And, you know, talking to our lenders, what's happening is marketing costs are going up. They're like, well, my volume's staying the same. I'm paying more. I got to talk to more. I got to be more efficient and get in front of more. And my marketing cost is going up. Well, having the right systems in place, you know, if you're not contacting your leads immediately, who goes online, you know, point of sale solution, someone applies for a mortgage, they fall out, they don't finish it up, you better contact them right away. Hey, what's going on? Let's get them back engaged. Or they do apply. Hey, you know, you got your mortgage. I'm here to help you. You know, let's go get that house. What, you know, here's the next step. Automating that process. If, you know, half the time the lenders aren't doing that, then, you know, of course your marketing costs are going to go up, which is great news. I tell lenders this is all great news, because if you look at your business right now, and lenders are looking at this right now because the market's changing, pricing's different. So volumes are going to go down some potentially, and marketing costs are going to go up. It's a great market, you know, still making a lot of money, but you have to be paying attention to what that looks like right now. Like, what is that going to look like, and how can it be as efficient as possible with all the business I bring in, because it's going to be necessary. It hasn't been necessary for the last year and a half. Customer service could be really poor, right? You could not call borrowers back in a timely manner because that borrower calls someone else, they're just as busy, right? The expectation's the same. Well, that's changing now. So those lenders who really, you know, invest in their time and processes, I think, are really going to thrive. And in 3 years from now, we're going to have, I think, some consolidation, and we're going to have some lenders that we don't know of right now that are going to become huge lenders. They're really going to grow because of it.
That's good. That's an interesting point. Well, and I think, yeah, I mean, there's certainly a lot of improvement in the industry right now, room for improvement, I should say. And I think you're right that is going to lead to some consolidation here once rates go up and things shift back. I think there's some lenders that are going to be, you know, they're going to be a little hurting and looking for an exit strategy. So let's switch gears here again and you know, tell us what you know, just from Insellerate's perspective, what should we be keeping an eye on as far as any new releases from you guys this year?
You know, one of the new releases that we released a month ago is our Data IE product. We have other ones, and we'll come out with some announcements of what the other ones will be, but we just released our Data IE, which is the ability to, you know, within our customer experience platform, as a lead goes into the CRM or lead management platform, we're pulling real-time information about this customer. Things like an AVM, like a real AVM, not just a, you know, a Zillow AVM, but a true AVM, high, low, mid prices, recent comps in the area, price per square foot, how many bedrooms, bathrooms, do they have a pool, what type of house is it, all this information around this customer. So that way, when the information comes in, you as the loan officer have really good information, can have a better conversation. And if they're looking to buy a house, you can send them a property report, right? So the same information comes in and you say, oh, you're looking at 123 Main Street? Let me send this to you, and all outputs, here's that house, here's the AVM, here's the comps in the area, is the values increase or decrease in the area, is the inventory increasing or decreasing in the area, all this great rich information so that you can have a better conversation. So that just makes that customer experience work. And then the other part of it is, then when it comes into marketing, what we got back to data alignment, the right message at the right time, now you have some really good insight, right? You know, I'll give you an example. You know, what if I said, you know, I want to start marketing cash out loans. Why don't I look at all my people who are in Florida, Texas, California, who have equity but don't have a pool in their house, and market to them, hey, you know what, now's a great time. Did you know you could probably put a pool in your backyard for $50 a month? And, give them something of value out of that. And now you're reaching a customer who's might be thinking this thing, well, maybe I should put a pool in the backyard, right? It is Florida. Everyone else has pools. I don't. I want a pool or wherever I'm at. So that information I think is really going to be, crucial. And so that's something we released. I think customers are really going to really enjoy.
Yeah, I think that, I love the idea of, especially this time of year, right before things get really hot in Texas and out here in California, sending them a message, hey, this is the time to build a pool. Absolutely. And if anyone wants to keep in touch with you guys and find out what's going on this year, I mean, I think the best way to do that obviously is through the website, insellerate.com, and then also following you on LinkedIn. I think you guys have got a lot of good content you push out there.
That's right. If you want to find out about us, insellerate.com is a place to go. Obviously, follow us on social media, whether it's Facebook, Instagram, or LinkedIn. Haven't gotten in the Clubhouse yet. Quite honestly, I'm still trying to figure it out. So, take a look. We have a lot of good content out there, and we tend to keep everyone up to date with what's going on.
Yeah, absolutely. So last question here. We're starting to run out of time here. So I think it's easy to forget the importance of industry advocacy efforts when volumes are high and everyone's happy and busy. So, from your perspective, someone who's been a big supporter of the California MBA the last couple of years, why should companies be sure to invest in advocacy work that groups like the California MBA and the MBA do in times of good and not so good?
Well, I mean, in short, it's our paid representation to our industry. We have lawmakers out there who are making laws who are only get informed by who comes up and tells them what's going on with something, and they don't see both sides of it. They're ill-informed. So we as an industry, if we want ourselves to be, protected in the sense of making sure we don't have lawmakers that come in and say, you know what, no more foreclosures. It's going to take 18 months to foreclose on a house. Well, that would, that was actually got passed, and that would completely change our industry when it comes to valuations and servicing rights and all these other things. That stuff can happen. I can think of recently the advocacy to try to not have the GFE or the additional 50 basis point, market hit. There's been several things that the industry has gone out there and gotten delayed, gotten changed, and it's like a small insurance policy to make sure your industry is being represented well, and educating the right people. Because I was in the industry during the market crash, and people blamed the mortgage industry for everything. It's like, well, if you were educated, I don't know if that's necessarily true. The people selling derivatives and there's so many other parts to why the whole market crashed. And not having people educated to go in there and say, well, here's really what we need to do. Here's how we, change the LE or the closing disclosure. Here's how we make it better, because they're talking to lenders who are actually working with the customers and actually have the information to inform them to make the right decision.
Yeah, I think you bring up a good point. It really is, every one of these issues are far more complex than I think a lot of lawmakers realize, in part because they're getting their information, their input often from the media. The media's job is to distill everything down to one simple narrative. And I mean, to your point about especially the financial crisis had many causes and impacts and inputs. And so I think that having an advocate right now that can kind of bring in the lender side of the equation, I think is definitely crucial. So thank you, Josh. Appreciate that. And thank you for joining us today. I mean, I think it was a good conversation again, and you're our first repeat guest on Connect. So I really appreciate your time and your perspective on customer engagement and experience.
Awesome, Dustin. I appreciate it. Thanks for having me on, and have a great day.
All right, thank you. And if you enjoyed the conversation here, make sure you can subscribe to us on our YouTube channel here. You can also follow us on SoundCloud, Spotify, and Apple Podcasts. And we'll be back again next Monday for another episode of Connect. We'll see you then.